I'm Donald Leggatt, and I'm joined today by Werner Klingenberg, CEO at GoldPlat, the AIM-listed gold and platinum waste recovery business with operations in South Africa, Ghana, and Brazil. Werner and the GoldPlat team have been developing the business since early 2000, and the business has started to pay dividends in all ways. The GoldPlat share price has proved remarkably resilient to stock market corrections and the Iran war. Werner joins us from South Africa to discuss the business in some detail. Welcome, Werner.
Yes, good afternoon, Donald. It's nice to be able to have a conversation with you again.
Okay. Now, you're in your 7th year in charge at GoldPlat now, Werner. The time has probably flown by. If I were to ask you to summarize what your achievements have been over those 7 years, what would you say?
Well, Donald, I think I've indicated to you and many before is the fact that in the end, I guess, as individual, I haven't achieved a lot. I believe that the GoldPlat team has achieved a hell of a lot. I think the last 7 years saw a lot of changes internally as well as in terms of our business model. I think 2019, we moved away from mining, started to focus back on what our mainstay is, which is the recovery business. So yes, that required us to build back our balance sheet. It also resulted in us investing and building our market share, specifically in West Africa. And yes, I think all of that sort of delivered the foundation for what we are able to do now. I mean, we're expanding into Brazil. We've been doing that for more than 7 years as well. We are generating and making it or getting advantage from our relationships, and we also benefiting from the higher gold price because of that. So with additional supply, with a higher gold price, we're in a position now to pay dividends, as we always promised the investors that we will do. And that's quite exciting. And I think it's something that we obviously aim to keep on doing on a quarterly basis going forward.
Yes, what is absolutely fascinating about you, Werner, and the team is that you take a very cautious approach to business development and how you actually expand, and you want to make sure that your roots are very strong because you know what the headwinds are. You live with the headwinds on a daily basis, a yearly basis. So you take things very cautiously, which I think is very impressive.
Yeah, well, I think, Donald, I mean, cautiously in a sense because of the nature of the business and I think where we operate. I think that the team does a hell of a lot in terms of trying to improve our recoveries and the services to our clients and maximizing the value we extract from the material we get. So from that point of view, it's quite an exciting enterprise to be involved in. I think because we are a nature industrial processor and to a small extent almost like a trader, where we get material, we process it in different ways or forms, sometimes recovering bullion, sometimes recovering concentrate, and then we'll send that to the smelters or to the refiners. It means that our visibility is based on our contracts, our visibility is based on our relationship with our suppliers, and that's where the focus is at the end of the day.
So do you think your visibility is much higher than it was 7 years ago?
Yes, Donald, I think the market also has changed in a lot of ways where we operate. We all see what's happening in West Africa, but in those changes, we've been able to build. I'll keep on going back to our relationships, and from that point of view, it's made it easier for us to feel more comfortable in terms of what we can do in our plants.
Okay, you mentioned West Africa. Were you alluding to the effects of local beneficiation in Ghana? Because the first thing you should say about Ghana is it is West Africa's largest gold producer.
Yes.
But they've thrown up this problem called local beneficiation. What has your response been to local beneficiation? And if you could put it in context for us, it's not all bad, but it's just yet another of those challenges that you've dealt with.
Well, I think, Donald, it's a reality that we need to face. It's not just in Ghana. I mean, if you see what's happening in other West African countries, Burkina Faso and Mali, and it's not
Ah,
just there. It's any developing nation, specifically on mining, is looking at ways where they can extract more value from that. I guess it's probably natural, and you can understand that. So I think that is a challenge, because you need to find ways of recovering value from refractory, complicated material in unique ways. You can't just throw it into a big pot and a big furnace just because you don't necessarily have that amount of supply that the big smelters will have. So you need to find different ways. But the advantage is, and I think that's where we are now, is the fact that you now have gone through it. You are recovering value from that material. So you've developed yourself a niche. You've developed some of the certainty and clarity that we've referred to earlier, and that's the type of stuff we need to now build on. We've done the sort of the difficult part. It's now to refine it, and it's now to actually go and find ways of leveraging that in industry slightly more, and that's where the focus will be.
okay. Let me take you to Q3 operations and profitability in South Africa and Ghana. What kind of a Q3? You just produced Q3 results a few weeks ago.
Yes.
What kind of Q3 did you have?
Yes, I guess the easiest way to explain it is strong, Donald.
Strong is a good word, Werner.
I assume you probably need a little bit more than strong. From an operating point of view, the operating entities achieved a combined operating profit before head office and finance cost and foreign exchange of roughly £3.8 million. Now, to put that into context, that's probably 500% higher than what we achieved the previous similar quarter last year. So it was a very strong quarter, and the reason for that is basically stability in Ghana from a recovery point of view, supported by supply. In South Africa, we've indicated to the market that we've managed to increase our market share, resulting in better supply. But also, the gold price obviously makes a difference to our business, and those factors combined helped us to achieve the numbers that we've achieved. And yes, the focus for me going forward is more about creating visibility and certainty for the market about what we can do in the future.
Okay, let me take you to the fact that you now pay a dividend. In fact, you've been paying a dividend for 4 quarters now.
Yeah.
How successful has the dividend policy been? What is the dividend policy? Why did you introduce the dividend? Why don't you wrap all that up for me?
Yes, I guess, Donald, that's quite. It becomes quite technical. But
what's
yes,
what's the overview?
I've indicated
why a dividend
that,
in the first instance? Why a dividend?
Yes. So I'm going to take you back. We've spoken about some of this. We had the primary mining in the past. Primary mining comes with a lot of capital investment. Obviously, we moved away from that. After that, it was about stabilizing the business balance sheet. And we did account for different types of risks at different times. At times, the market is aware of it over the last 5 years, local beneficiation being one of them. And we've indicated to the market that we are looking at returning value to them. We actually returned, can't remember now, I think it's about £400,000 in share buybacks about three years ago. And then afterwards, again, we need to make sure that we're comfortable from a working capital point of view. I think with Ghana, where that's going now, with where the gold price is, we're quite happy in returning value back to shareholders. That's what we've indicated we want to do. And I've indicated to you as well. A part of us is a bit linked to trading. So as we're generating those cash flows, it just makes sense to give it back to shareholders.
Okay. But holding a lot of cash seems to be one of the characteristics of the Goldplat business. You need the cash in order to do to trade. Is that right?
Yes. I think that explains it quite well, Donald. In the end, we get different types of sizes of batches. As the gold price goes up, obviously the value of some of those batches increase. And I mean, we've got quite a unique plant and equipment on site, meaning that probably for us, it's got a lot of value, but it's not necessarily something that you can leverage that easily in terms of funds. So from that point of view, we've got a very good relationship from a working capital financier that we've developed over the last 8 years that's helping us a lot. And further to that, we also want to make sure that if opportunity presents itself, we do have the firepower to be able to close on those deals. The cash levels at the end of the quarter was high, but we've indicated to the market it's not necessarily usual levels. There were still some creditors that we needed to pay. And yes, we still paid a dividend, and we're going to assess paying dividends going forward. So we'll evaluate how we can make sure we extract the right value from the cash on hand, and if there's any free, we need to make sure we give that back to the shareholders as well.
Okay. So at the start of 2024, I had a quick check before we came on air.
Yeah.
The gold price was around, I believe it was around $2,000 an ounce. Today
Yes.
it's at 4,460.
Yeah.
God has been kind, Werner. Now,
Yeah. Yes.
Does that mean you're working your recovery operations as hard as possible to get as much gold recovered as possible? How do you see it?
Yes. I mean, the way I see it, Donald, I mean, we always work hard in terms of extracting as much as possible value from material. And I've indicated to the market before, I mean, we're more constrained on the supply side than anything else. So we operate our plant and equipment at 100% at any given time. So yes, the fact that the gold price has increased in a way gives us the ability to try and extract more value. But in reality, the focus would be to maximize our resource over the long term. So when the gold price goes up, some of our circuits, where it's lower grade, means we've got the ability to process lower grade ore, increasing the life and visibility of the material supplied to us. So that's the one side of it. And on the other side of it, it's really about doing the same thing that we always do. So no, gold price doesn't necessarily change what we do in the plot.
Okay, let me take you to the TSF, gold tailings pile, which has been much discussed. It must be worth a considerable amount by now. And as I understand it, forgive me if I got this wrong, the plan is to pipe these to a recycling facility. That's the short version of it. And permitting remains a problem. So what's the latest? What's the update on that? It's a very important part of the business going forward.
Yes, Donald. I think, permitting, as you indicated, that's probably one of the biggest things that we need to get in place to make sure we can process it at the other facility. With a higher gold price, we also are looking at saying, well, is there a way of monetizing some of it sooner, even if it's at lower volumes, just so that the market can start getting a feel of what is possible out of that material. I think that's the important thing. We've indicated to the market we want to update our JORC resource as well. I think we said we probably will give them data end of October, I think. Yes, we already have a JORC resource of 81,000 ounces in there, done in 2016. We've got a good feel of what the ounces is there at the moment, because we know what we put onto that facility to start with. However, we obviously need to have a proper JORC to be able to share that with the market. So we're looking forward to be able to do that. But yes, even an update on JORC resource for me it's important. But for me, that's what's more important is finding a way of starting to extract value. Even if we start small and build up from there and start creating more visibility for our long-term shareholders. There's a lot of people that's been holding on for that day. and we're fully aware of that.
The TSF is what they're waiting for, I presume, because that's going to kick. That would presumably be a
and we
kickstarter to the share
that,
price.
Donald. Yes. So yes, I think there's value there, and obviously it's a big focus and it's sort of a big ticket item for us. And yes, it's we'll talk about growth later, but I think TSF is the first thing. We don't want to go and do a bunch of different things whilst we're actually sitting with something. I almost want to say in our pantry. We just need to find a way of unlocking the value.
So the TSF is the priority. You've got a JORC coming possibly October, and the whole point is, can we possibly start doing some of this recycling in-house? Is that an accurate summary?
Yes, I think that's accurate. Yeah, it's probably a good summary.
Good man. Okay. Headwinds. I want to just say that in your 7 years, you must have just about dealt with everything, and somehow you keep bouncing back. So I just want to say well done, because the dealing with what did you describe them as? Developing countries, Ghana, South Africa, Brazil. These are not easy places to do business in. You've lacked regular electricity supply in South Africa. You've got the whole local beneficiation thing going on in West Africa, but you deal with things. So I just want to say well done, really, because I think it slightly gets taken for granted that but it's not like working in the UK. It's not like working in Europe. It's a very different world. Tell us all.
Well, firstly, thank you, Donald. I'll relay the message to the team. I think, in the end, we do have a bunch of resilient people, and I think the view is that every uncertainty actually provides opportunity, and that's the benefit of operating in developing countries. You've got ability to make a difference. You've got ability to shift minds, and you've got the ability to actually develop things that probably developed nations doesn't even have, because they never had the need to develop these type of solutions. So from that perspective, I think we've developed a good mindset to work through these type of things. However, yes, I think from a team's perspective, we also realized that we're at a point where we need to say, how can we try and limit these type of things happening, and all of these surprises jumping at us? So that's where the focus is going to be: is limit the surprises, extract value from our TSF, and then we've got a few exciting projects that hopefully we can also bring to the fore in the near term.
Exciting project sounds good, Werner. PGMs, maybe PGMs are one of your exciting projects. We haven't talked about PGMs. What percentage of, presumably a fairly small percentage of revenues come from recycling PGMs at the moment? So might there be room for expansion there?
Yes, firstly, PGMs is probably, I think South Africa's got the biggest resource in the world when it comes to PGMs. But the metallurgy works quite differently than gold. But we have extract value from that. We do every year. It's not that significant in terms of our total operations. However, it's something that we're trying to build. And at the moment, there's a few things there that we are specifically looking at to try and see if we can extract more value, and just provide another leg to the business to make sure we can, again, as I say, make sure the quarterly numbers is more smooth and not as erratic as it's been in the past.
A little bit of diversification is a good thing.
Yes, I think diversification is always good. The important thing is obviously to do it in a way where you can leverage from your current capabilities and investments. I think from a growth point of view, our focus is going to be on stabilizing, on sort of managing our cash flow balance slightly better, managing cost. We've got a couple of projects we've spoken about, specifically the TSF. So whilst we can do that and focus on that, I think we don't want to go and spread the team too thin. We will rather return extra cash flow to shareholders.
Okay,
And then
you want to avoid management stretch.
Yes, I think, we still are quite a small team. I think that's been one of the successes of GoldPlat over the long term, is that we try and keep overheads as low as possible, which gets us through maybe the times where you do have certain constraints, whether it's gold price, whether it's supply, and then rather attack when you've got the heat, or when you got the wind in your sails, as they say, Donald. So that I think that's the one part of it. But yes, it's not saying we're not going to grow. It's just saying that we have important milestones that we first want to meet before we're going to start becoming aggressive.
My final question to Werner: what can investors expect to see over the next few months and possibly even over the next year? What's happening with GoldPlat?
Yes, Donald. I think the easy answer is more dividends. But yes, from an operational point of view, the focus is going to be on what we haven't discussed: growth in Brazil, and then obviously looking at providing more updates and information on the tailings facility, and hopefully a few exciting projects. Apart from that, it's basically doing exactly what we've done over the last few quarters, and we're excited to be able to start rewarding the shareholders that's been with us for quite some time.
Werner Klingenberg, CEO at GoldPlat, you've joined us from South Africa today. Thank you very much indeed for the comprehensive update. It sounds as though the business is going swimmingly well, and you've done extremely well to navigate it as well as you have. You and the team, of course. So thank you, Werner. Thank you.
Thank you, Donald. I appreciate it.